The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
All right, hello and welcome to The Trade. Before we get into the charts that matter, let's have a quick look at what traders are watching out there. And the US Federal Reserve cut interest rates by an expected 25 basis points. Fed Chair Jay Powell citing the need to support the economy in light of a weak jobs market.
While the unemployment rate remains low, it has edged up. Job gains have slowed and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point.
And the central bank also indicated it will steadily cut rates for the rest of the year, with the Fed projecting 2 more 1/4 percentage point cuts this year.
We were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now, and so that warrants a change in policy.
And new Governor Stephen Moran, who joined the Fed on Tuesday, was the one dissenter in favour of a 1/2 percentage point cut.
This event projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027.
Jerome Powell did point to rising downside risks of employment compared to inflation, but said inflation risks still need to be assessed and managed.
We have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point. And we do expect them to continue to build over the course of the rest of the year and into next year.
Of course, we saw Treasury yields initially erase gains, turning lower before reversing course as Powell spoke. The US 10-year 4.07%, the US dollar strengthening against major peers. But of course, the Aussie dollar just got a hit after we had jobs data released. So let's get more on that now with Nick Twidale from ATFX, who joins me in studio. So quite a big drop here from the Aussie. I mean, that was a big miss in the jobs data.
It was a big miss, and I think we've been expecting it for a while, haven't we? I know we've spoken about it offline a few times before, but certainly what we've seen in the newspapers recently, that the jobs market is getting hit, but to see it in the data, I think, is a bit of a surprise for the market this early. And Aussie's dropped like 25 pips straight away on the back of what was a tough night as well after the Fed. So it looks like we've probably got a few more sessions of the Aussie heading south. Yeah,
all right. Well, let's get into your chart of the Aussie and what we're seeing. And we know that it's moved since you sent us this, but it's some big moves.
Yeah, so Aussie topped out around just above 67 cents, and we were back to, and this morning we were just around 66.53, but dropped down, we were around 66.35 when I just came in the studio. We're still at the upper end of the range, and I think the trend's still in place for a move up. But after what we had from the Fed, it's interesting for us to trade in the Aussie this morning. We've got the dollar side and the Aussie very, very relevant. I think what we've seen for the Fed, we may see a bit more of a correction for the Aussie against the dollar. So I'm looking for another move, probably down to that 200-day moving average, which comes in around 65.73, and then the better support is slightly lower than that, down near 65 cents. I don't think it's going to go too much further. I think we'll then probably see the dollar downside, the dollar bear move and trend reassert itself as we move forward. So
a bit more upside potentially in the dollar, and you did see that overnight with the euro weaker.
Yeah, absolutely. I mean, euro had a massive move the night before. We took out stops in the euro, and the charts come up nicely. That move above the highs, it took us to a 4-year high. It's traded kind of perfectly on the technical side of things, and I've left that top side resistance trend line. It was a key one on the dailies. Took out stop losses, went up. Then we got a nudge higher on the Fed on the initial cut, but then of course we've kind of priced in those three those 3 rate cuts anyway. Euro back, and it's sitting at a very nice level there. The former resistance is now providing support around about 118.30. So I think we've got further moves in the euro as well. I think it could be an interesting few days.
Yeah, absolutely. And you speak of interesting few days. I mean, we had the Bank of Canada as well. We've got the Bank of England tonight. What's sterling doing?
Well, if we look at what we've got from both, yesterday we had the Bank of Canada and the Fed. Both of them had head fake moves. So it wouldn't surprise me if we get the same from the Bank of England again tonight. No rate cut expected again. They cut last time. They don't really have, with inflation where it is, they haven't really got a good reason for further cuts, despite, like the US, political pressure from the government really wanting to see a bit of a relief on cost of living. But they can't really go with inflation so sticky in the UK. We're back in the middle of the range. I think they're going to really focus on inflation over there. The MPC is very concerned about it. They were last time. That was the shock. If we get that hawkish hold, I think cable could go and re-examine those resistance trend lines, and they're up sort of around about 138.
All right, and we're also looking very closely into safe havens. I mean, we've talked so much about the run-up in gold as well. What is the yen doing?
Yen's been, as always, very lively. Its haven qualities have come in quite nicely. From a technical perspective, it traded really well yesterday on the Fed. It hit that, it just actually nudged underneath the previous support line, but it's bounced really nicely on there. I expect if we see further geopolitical concerns, and we've got them in Japan itself, that the yen will appreciate. I think we're going to see a resumption of that dollar down. So I'd be fading moves up towards that 200-day moving average at 148.66 there, and the trend line just above it. So I think we see the trend resume for dollar yen. But it's choppy for all currencies at the moment. So I think if you're in the money, certainly take your profits while you can.
Yeah, absolutely. All right. Always appreciate it, Nick. Thank you so much.
Thank you.
Nick Twidale from ATFX. That does it for this edition of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.